Good morning, Gary. Okay, so are we in a new bull market, Gary?
Some areas, yes. Some areas, no. I'm a big believer in the markets. The whole market's never going one way. I'm going to show you I have the radio show 5 days a week. I have this consulting business. What I try to do, there are a few things Bill O'Neill once said to me the first time I met him. And number one was, if you can avoid the bad areas and bear markets, you're going to be ahead of 99.9999%. So there's definitely bull markets in semiconductors. Here's your Oracle, that's up there.
Right. Okay.
A lot of the tech areas, but there are bear markets that need to be avoided. And I'm really worried about financials right now. I don't know.
Yeah, the banks look lousy. Even Goldman, Gary, some of the best of breeds. I'm telling people don't bank on the banks.
Yeah, let me bring something up real quick. As you know, I'm one of the biggest complainers about Jay Powell and the Fed and their constant interference with free markets, the ability of investors, traders, and speculators to do their thing at a certain time at a certain price without him interfering. And you know what he did with the 0% rates and the 9 trillion, distorted the whole freaking bond market, which the main reason I believe inflation showed up was that. What you saw was the distortions in the regional banks having to go out long to make any money. Austria did a 100-year bond and was able to do it at 0.8%. So once the inflation came and the real market, once he stopped printing, interest rates started going higher. He sat there and what did they say? There's no inflation. Then they said it was transitory. Then they slow walked it and then they played catch up. And so they were way behind, causing all kinds of problems. My biggest worry right now, and we're just talking fundamental before technicals, is that they are now way behind the other way. The 10-year yield that's 3.685 this morning, he's basically telegraphed and guaranteed 5.5, 5 3/4. Again, not listening to the market. And I'm just wondering if the banks are reflecting that. I'm not sure. All I know is I'm just going to throw one up there. If I can figure it out, there you go.
I mean, the XLF and the KRE don't look much different to me, except the magnitude of the initial drop. Otherwise, they're identical.
I'm showing here this is Bank America. This is a huge bank. And supposedly we're away from the banking troubles. And then I look at this and it's like a holy crap, what's going on here? So I just keep this in the file manager. The only thing I owned, look at JP Morgan versus Bank America, but I sold JP Morgan, I believe on Thursday with $1 loss because I was hoping it would break out and never did. So that
discipline.
Discipline. When wrong, be wrong fast, be wrong small. It's a simple rule that keeps you out of big trouble. So real quickly, if you don't mind, here's China, the F.A.C.E.
Yeah.
And you can go through a heck of a lot of names under that umbrella, which are just pretty much, bearish.
Baba looks the same.
Oh, you can go through, I'm bearish on gold. There's the gold miners. That's not hard to figure out. And just a whole host of names and areas that I still think you got to be very careful about and just, stay very focused right now because it is the old line, a tale of two cities.
Yeah, it's bifurcated like crazy. I've never seen this much bifurcation.
And the bifurcation.
Who wins the day? Who wins out the day, though, Gary? If these banks are going to new lows, is the market, even tech, going to be able to ignore that?
Well, I can tell you before June 2nd, it was so narrow. My thought process was, the normality is going to be the tech is going to join the rest. And then we had the NVIDIA thing on, May 25th, and these things just went vertical. Some of them are now finally normalizing a little bit, but I still think the tech and the semis and the NASDAQ and NASDAQ 100 so far Normal as normal can be on the pullback. I can tell you that a week and change ago, you had the Daily Mail. It's a United Kingdom kind of celebrity newspaper with normal news worldwide.
Yeah.
They had a big article on the big 8 tech stocks. And I'm like,
Wow.
wait a minute, they're reporting the news now. And then a certain famous somebody called them the Magnificent Seven. And then Barron's had the bull cover. So I'm just on notice. The only things I've really owned is the big tech and NVIDIA. There really hasn't been a reason for me to go much elsewhere.
How about Apple's at new all-time highs too?
Apple's my biggest position right now. And as I say, just ride the trend, and you can see the green, the 21-day has held it and contained it.
Are you out under 180? Are you out under 180?
If it breaks the green, see ya.
Okay, got you. All right.
Sometimes it's pretty simple that the lines just draw up very well for you. And we'll know a hell of a lot more if an Apple takes that out. Some of these big leaders that have been very strong. Meta takes it out, which has been strong.
These are like the nifty 50.
Oh, yeah. Other things, just real quickly. Not thrilled with the EEM, what it did in the last few days. Europe's been under more pressure. I don't have the chart of the London FTSE, but that looks pretty ugly.
How about the Nikkei? That's really been the parabolic star. You have any view on that?
My only worry is it kind of went vertical, and sometimes that's climactic. And then I look underneath and I see Sony really breaking badly in the last few days. So I'm not willing to call it a day. But just I'd be a little bit more wary. Then again, let's see, Honda, just a little too much vertical, a little Eiffel Tower-ish. So let's see how they pull them back. So far they're normal, except they feel a little bit frothy at the top. Pardon?
Bubbly.
Yeah, a little bubbly at the top. Now that said, and again, I don't want to spend too much time on the gross, because then you have the SOX, which has just been the big uptrend. If I had any complaint right now, it got in the trees. You know, the move is out of the norm. You see it in things like SMCI. I mean, these are out of the norm moves going straight up. And I think they're going to have to go through this process. I don't know if you call it the scare or whatever. And I think it's going to separate the great from the not so great. And one of the things I did this weekend is, okay, we've had this pullback. What are the pretenders? What went along for the ride? And you can tell by how bad they sold them off. Look at IBM in the last 4 days.
Yeah, and Intel.
Intel, which people have been harping on, saying, have you seen their numbers? I look at, when I see this semiconductor, this is the SOX, and then I see Texas Instruments. Whoa. So we're really now, we're really now, relative strength wise, we're really now able to separate the big strength from the little strength. But leave no doubt, the S&P is in an uptrend here, in shape. That looks to me about as normal can be. You shouldn't really go from 4,200 to 4,400 in 2 weeks. So you're going to get this normal pullback, and we'll find out in time whether it's more meaningful or not, because, the financials, as I said, I mean, look at these regionals. Holy smokes.
They're going to new lows for a third drive. In fact, I came up with a target of about 28, which would be the COVID lows.
Yeah. We don't want to see that. So
AMD
again,
was also another weak tech. Really gave a lot of it back. Look at that.
Yes. Yeah. And volume patterns negative. I look at the bottom also. Their earnings stink, and it turned around on the NVIDIA thing. A lot of that. The one thing I will say about AMD, I kind of liked what it did Friday. It got real bearish, and then it reversed. The problem is that it's lost relative strength. And what you always really want to do in any group is hang on to the things with the biggest strength. And once this broke right in here, that's problematic. Plus, it got very wide and loose at the top. So I agree. We got bull market, but we also have bear markets in areas. and you just really need to avoid it. This is a time where if you own every sector, you're going to underperform because there's still plenty of things that are not so great, and you named them. And then in the Dow,
You know what else, Gary, that you just demonstrated? That
yeah.
you could have the right sector, but the wrong stocks in the star sector and not have performance. Like
That's why every night with the semis, I scan about 75, 80 names. And, just so you know, you would know it, but this is a semiconductor stock, Wolf. So you just never know. And that's why you got to stick to, you really got to stay very, very focused here, or you can be in pretty big trouble. So yeah, the Dow's not in the bull market, and that's because there's some real bad Dow stocks. But the S&P, NASDAQ 100, but not the Russell.
Russell still looks like crap.
Well, it really was hopeful, and maybe it'll resolve itself. But it seems to me that this regional bank at SNL, the Russell may just have a bunch of these things in there, because every time they start getting hit, look what happened here. And the Russell, which really looked like it had a shot here, just shot you a certain finger in the last few days. And that's the end of that for this second. We're always open for changes and things getting better. But man, oh man, that was some pretty last week.
When it comes to rates and yields, you have a view on TLT, Gary?
Well, here's the 10-year, and just leave no doubt it's tracing out range bound here. And unfortunately, while the 10-year is tracing out range bound, let's make like this is 5.5 up where I draw that red line. That's where Powell's going in higher. And therein lies a worry. Just remember.
But can't we go to 3 first?
On the 10-year?
Yeah.
Sure.
If we start rolling over under 360 and then and that's what it's trying to hold. I don't know.
You got to take this out. And then leave no doubt you got monstrous support over here. But so far it's just trending. And again, I have to bring this up. My worry is, when let me spread this out a little bit here. When I'm going to go weekly. Give me 1 sec. There's your weekly. So here's this. We get this. And Powell's saying inflation's transitory and it's staying at 0. So he was way behind. And again, I'm just worried he's doing the same, but the other way.
Yeah.
And if he misses the mark this way, I'm going to show you 2 charts that, how everybody's been calling for a recession, but we haven't had one.
Yes.
Now, I've been saying that until the job market is lost, I don't think we go into recession, but we're going to have just a slow economy. But look at Paychex and ADP. There's Paychex, there's ADP. These are your 2 big payroll companies, and I'm just wondering if they're starting to say, well, they've been saying something, but you get my point. I try to add 1 + 1, and I'm just hoping that this guy doesn't go too far and causes the other way, which means look out job market, look out economy, look out earnings, look out profits, and guess what happens to a decent part of the market? Notwithstanding the AI revolution, who knows where that goes?
Yeah, I'm a hologram today. Anyway.
I'm always asking myself, okay, just what's going on and a little bit of why. And the Nvidia's skyrocketing, but ADP and Paychex, of course we just avoid these things, but just it's all in the brain right here, because you take out before June 2nd, if they came after the technology, we were going to be in real big trouble. Instead, June 2nd, the caterpillars and deers woke up, but for how long? And even that, they're getting a little bit of pressure here. So I think the big indices are in good shape. The small indices are terrible versus on a relative basis. And I'm just keeping my eyes blazed on what's working. And I've stayed with, my positions over the last 2-3 months have been Apple, Google, Nvidia, Meta, Oracle, Salesforce.com, JP Morgan, and I handled Oracle. Oh, and Microsoft. I handled Oracle and Microsoft terribly. I made money, sold them too quickly right before the Nvidia boom, and what can I tell you? Such is life.
Well, who doesn't do that sometimes?
Oh yeah. Oh yeah.
But so your contention is that these payroll companies, the reason they're going down is because they're losing business, companies not needing them anymore.
I'm
kind
just
of a
I'm always looking for the word. What's a harbinger? What is something telling me? And I'm just keeping them on notice that everybody's been calling recessions for the last 6 months. We haven't had it, but look what the payroll companies are doing. So we'll see. Again,
and yields, and if the yields drop again, I'm thinking. Do you see any difference? Like someone that I follow and have interviewed was talking about the spread between high yield and governments. That's starting to widen. First time in last week, first time that could be signaling a period of risk off.
If I just looked at all of that, if I looked at the 2 versus the 10, I'd be like scared out of my wits. But every day there's good stuff. We're just sitting there watching like an MDB that a great gap. And with the NASDAQ dropping here for a few days, it looks poised to break out. So we're sticking all over that one right here. Things like Uber, just nice little drift higher. By the way, we also own the ITB, the home builders.
They've been on fire.
Yeah, and I'm like, wait a minute, hold on a second here. If we're going into big recession, what's with the home builders? And maybe that's the lower rates. And I live for things like this home builders where they just drift slowly but surely along moving averages. But of course, we watch everything. So there's definitely things out there. DraftKings. This is besides the big Facebooks and Apples and all that. So there's still plenty. I don't know if you spoke about this Celsius. There's some good looking stuff in here. Netflix on the normal.
I didn't like the DraftKings chart you just showed.
Pardon?
I didn't like the DraftKings chart.
I have one issue. It's trading back and forth, back and forth. If it breaks the green, it's over. If it tightens up and moves out, that'll be another story. I get where you're coming from. On
you
the
got a 3 drive. You got your first. It's a 3 drive. I know you don't follow RSI, but you do follow relative strength ranking. But to me, it looks like distribution up there.
Yeah,
I could be wrong, but
we'll see. We'll see. It's not wrong or right. Netflix normal pullback here. Tesla gets a downgrade today. That's just normal pullback right now. So there is just definitely things to exploit if we don't get serious distribution, if we don't start to see these semis roll over. So just again, I can't help but say it's one of the great tales of two cities where I can show you. Look at the utilities, which normally with interest rates down, maybe going down would do better. The staples, blah. I can go into the BHPs and Rios that just rolled over badly after trying to break above range. And that's what we mean by I'm worried that this June 2nd emergence may be over because they're so easy to sell them down. We'll see. All I can tell you is as we come into this week, for me, it's the big tech and some tech underneath. The one I didn't buy, which I'm PO'd, is Palo Alto. Look at the strength of some of these things. Yeah. So I just tell your viewers and listeners, stay very focused. Do not settle right here for things that are not working, because it really is. The institutions are coming out of this, Bank America, and going into other things.
Apple.
Amazon looks ready to continue higher. Thursday, they were just in it, and it pulled back Friday because of the NASDAQ down. So again, this is where I'm sticking, and if that changes, then we'll be talking.
Okay, Gary. So last takeaway that you want to say, we have my takeaway from you is we have bifurcation in the market, that what's been leading, stick with it. Big tech the indices are still look okay. Avoid things like financials. I'm surprised I hadn't looked at a utility chart. That was pretty interesting. Um, and they were railing when rates were going up, and now they're coming off. So I
Very
think
weird.
so. They don't act like they used to. You think
And
they
you
could
just
have,
want,
maybe they have credit issues like the banks. Maybe
yeah,
they own all those long dated mature. Maybe they got caught in the duration game too.
and
Could
when
that
you
be?
see, yeah, look, all I know is that you had to go past the 10-year to make more than 0.5% for a long while. So who
Yeah.
knows what's out there? I think the office situation. I think New York is 50% full, and we're hearing about they're giving away buildings in San Francisco for 20 cents on the dollar. That's out there. Anything's possible. But for me, I just stick, every night we scan 1,500 to 2,000 names, 200 sectors, every country, and just stay focused. And when wrong, be wrong fast and be wrong small. And don't do what I did with Oracle and Microsoft and cut off leaders too quick. The good news, I have some others that we didn't, and they're working. But I
All
can't
right.
help but say there's a lot of bull market talk, but underneath the surface, there's some things to be watched, as I showed a few of them, and we'll see.
Hey, Gary, let go of those trades. You're still commiserating over it. It's just next. And you know
Yes.
what? You can't expect perfection at the crap table.
Let me do one more, if you don't
Yeah,
mind.
go ahead. Yeah, sure.
I don't know if they reported yet this morning, but look at these cruise lines. This
Wow.
Carnival, Royal Caribbean broke out at 81, is already 97. Here's NCLH. So whatever's going on with the cruise lines, I think they're finally playing catch up. They're still, look how far down from before COVID.
Yeah.
So just want to throw that out as a good area at this juncture, and we'll see what happens. I don't think.
Anything in natural gas, it's starting to come out of the hold, or any
Oh,
natural
yeah,
gas issues that look good to you?
Friday. Good volume patterns at the lows.
Yeah.
It kind of three steps down, and just notice. Um, Here's your downtrend. Just so this,
Yeah.
notice how it's flattened out now,
Yeah.
and that's
Saucer
how
bottom.
that's how bear markets potentially bottom. By the way, we had mentioned. I hate this thing. Hold on. There you go. I
Yeah.
had mentioned this to my peeps when it went to 772, and then it just tucked its head in like a frightened turtle again. But it
Yeah.
looks like a move through 772. That thing could get $10 before you say boo. So yeah, great one, great eye on that one, and that's on my screen.
Well, you know what they say about bottoms, and markets bottom in silence and top with violence.
And nobody's talking about this. I will tell you that.
Okay. Well, Gary, got a great review. Best way for people to follow you, I know, at Gary Kaltman on Twitter, and any
At Gary
website.
Kaltbaum. It's a bomb, not a
Bomb,
man.
bomb. Okay, you're a
BAUM.
bomb. Okay, you're a bomb. It's Monday morning. I apologize. And to catch your radio show. And Gary,
GaryK.com. We post it there, and we post it on Twitter. We usually about 5 p.m. every night.
and you could catch Gary on Fox Business every once in a while. Do you have a regular schedule, or just when they call you?
It's pretty much every day. I'll be on today, Fox Business 2 p.m. But I have 3 or 4 days a week where I'm definitive, and then I roam around whenever they ask, and it's a
Okay.
blast.
Yeah. All right. Well, you're a blast to talk to every time, Gary. I always look forward to it, and everyone feels your passion for what you do, and you brought us a lot of great looks. So I appreciate you
May,
edifying the FACE
may I
community.
just ask you what you think's going on with the VIX while I have you?
Yeah, sure. It's not broken. I'll just say that.
Okay.
Buy,
All right.
buy. How about this? Buy straw hats in the winter.
Okay.
Ever hear that
Gotcha.
one? All right.
I've heard of, yes.
All right.
Okay.
All
Thank
right,
you,
Gary.
sir. I always
Gary
appreciate it.
Kaltbaum. Gary Kaltbaum, and follow him at Gary Kaltbaum on Twitter, and check him out on Fox and his daily radio show. This guy works hard for he's an RIA. He works hard for his people, and you could tell that, he's on top of what's happening in many sectors. So
And it
thanks
still
again.
ain't easy.
Thanks, my trading warrior brothers. I
Take care.
appreciate it. All
All
right.
right, bye-bye.
All right. So that's a wrap today, guys. Steve ended the interview 3 minutes early. Hope that's okay. And we can join the team in, let's see, 18 minutes for the morning edge so that you get the edge. And I want to thank everyone for, their attention, and see you for Turnaround Tuesday. Don't just count your pips, count your blessings, and see everyone tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.